Good evening, dear colleagues. As always, it's Sunday, and this is the Forex Times project. I'm Dan Strelkov, and as usual, I invite you to the Forex Times community where you'll find unique forecasts based on data from the Chicago Mercantile Exchange and the U.S. Commodity Futures Trading Commission. You'll also discover strategic target levels, which the price hits in almost 80% of cases. Additionally, we analyze triangles as penultimate waves and the midlines of triangles as strategic levels. Along with this, there are consultations and trading recommendations, so please join us. I'll be delighted to see you there. Let's begin today as usual with EURUSD, then move on to gold, and finish with the SP500 index. Starting with EUR/USD, I must note that according to data from the Commodity Futures Trading Commission, we observe an upward trend. However, we also see a 5% decrease in buyers and a 6% drop in the capitalization of the trading instrument, now standing at $219.58 billion. What's most interesting, friends, is that we received this data during a time when the price of the instrument was rising. This indicates a crucial point. Buyers are exiting this instrument and taking their profits during this period, while the market itself continues to rise. This is nothing less than a divergence between the readings of the Chicago futures market and the actual EUR/USD market. Because of this, I can suggest that for the upcoming trading week, we should focus exclusively on sell positions. However, there's a strong likelihood that the 1.1220 level will be tested. So we can expect a further rise of this trading instrument to 1.1220, after which we can look for entry points to sell based on price patterns. Don't forget about proper capital management. Another small point. If we consider the current structure from the perspective of Ralph Nelson Elliott's wave theory, we can see that this corrective movement began with an impulse, specifically in the third wave, which also follows a 5-wave impulsive structure. Thus, we began with an impulse likely in wave A, followed by a correction, and now we should see another impulse, as we are currently moving in a zigzag pattern. More accurately, this is called a flat, which ends with impulsive movements. While it's challenging to apply the theory of a 5-wave structure here, the possibility of forming an ending diagonal triangle is quite realistic. Therefore, we're nearing the end of wave B and entering wave C, which is the wave we will aim to trade. If wave A was impulsive, then we expect wave C to also be impulsive, starting with a smaller impulse 1 to 2 to 3 to 4 to 5, or a smaller impulse within a 5-wave diagonal triangle. After a correction, you can set sell stop pending orders to enter the market. This is the plan for Euro to USD in the upcoming trading week. However, I must point out that the strong resistance range for EURUSD is quite large, spanning from 1.1220 to 1.1280. This means that even though the 1.1220 level may be tested, the price could rise higher as much as 80 pips. But as I mentioned earlier, focus on sell entries based on price patterns and ensure you practice sound risk management. Regarding gold, everything is quite ambiguous because of the situation in the Middle East. However, I still recommend focusing exclusively on selling. The reason is simple. The triangle hasn't gone anywhere. And as you know, a triangle is the penultimate wave. We are now likely in the final wave, probably a terminal diagonal triangle, so we expect a reversal from the 5th wave downward. As I mentioned in the private section of our community, we're looking at a target level of 2,350. However, there are plenty of strategic target levels before reaching 2,350. So join the community to stay updated on all the strategic levels for all the instruments we trade. Regarding this particular trading instrument, there's also a strong resistance range. If the price tests this range on Monday, Tuesday, or the first half of Wednesday and a sell pattern appears, you can confidently enter short positions. I personally use two types of patterns: NBA with liquidity fulfillment and impulse correction, where I enter the market with pending orders after the impulse is confirmed. If we correctly identify the impulse, it is highly likely that the trend will continue after the correction. So friends, we only use patterns to enter the market. The strong resistance range for deciding on sales is between 2,645 and 2,658. If the price reaches this range on Monday, Tuesday, or Wednesday, we'll be looking exclusively at sell opportunities, but only when a pattern appears. Now for some concerning news, professionals are quite fond of the 4,000 level. Earlier this week, they rewrote the maximum open interest on call option contracts for this level. Take a look at the 4,000 level and the volumes there: 145 million, 804 million, 300 million, 3 billion, 712 million, and a smaller figure of 307 million in call options, showing the maximum open interest for call option contracts is currently on the upside. I understand their concern. They are afraid of the continued escalation in the Middle East, which could turn into a third world war. After all, Iran doesn't support Israel, and Israel is a nuclear power. Iran also has its own nuclear research and possibly even weapons, which naturally worries investors. Right now, the best professionals in the world are looking exclusively upward in terms of gold. So when I talk about sales, I mean correctional sales within the triangle, after which growth is highly likely to resume. This resumption of growth is not just based on the technical picture, but also on option data. If we look at the option contract accumulation, the call option accumulation is much greater on the upside than the put options on the downside. The put options are positioned just below the triangle's middle line, where the strategic level of 2,350 is located. So at 2,350, there are 7.7 million put option contracts, a strategic level of about $1.5 billion, and two more strategic levels according to weekly option contracts. So join the community to stay updated on all these levels where the price will likely reach with at least 80% probability, as I've mentioned before. The S&P 500 index is somewhat similar to gold. The index is rising, but professionals are expressing their opinions very clearly. Let's first look at how professionals who want to sell are expressing their views. There is a very good resistance range with the strongest resistance level at 5,800 to 5,850. Friends, if in the upcoming trading week, the S&P 500 index tests this resistance range, and if professionals do not suddenly revise their expectations upwards, then we can enter the market for selling once a selling pattern appears. Now, I'll show you how hedge fund managers see this through put options. Despite the rising instrument, they revise their expectations down, not up. Friends, while the trading instrument is rising, professionals sharply revise their expectations downward. And look, specifically where they have revised them back into this large range where there are enormous clusters of put option contracts. Let me show you even more. Just look at how many billions of dollars are accumulated here, tens of billions of dollars. And what's happening above? Nothing. The closest option contracts above are only worth $2.5 billion, $204 million, and $775 million, and that's it. There's nothing more above. But below, every week, professionals are placing billions of dollars into the market week after week, essentially throwing option contracts into the trash for billions of dollars. Someone give me $1 billion. Sorry for the humor. So Either these professionals are idiots or they know something. I believe they know something, and something will happen in the US. Perhaps a recession, or maybe inflation will rise sharply, and the Federal Reserve will no longer be able to lower interest rates. So this has happened before in history. I can't recall the exact year, but there was a time when inflation started to rise, then dropped slightly, and the Federal Reserve began lowering interest rates. Then inflation doubled, and the US faced a huge financial problem. So maybe professionals and investors know something, and they know the S&P 500 index is going to crash significantly. That's why, friends, I suggest considering sales for this trading instrument, and I just explained why. Thank you very much, friends, for listening. Once again, I invite you to join the Forex Times community. I would be very happy to see you there. You won't regret it. Have a great evening, everyone, and goodbye.